Welcome back to the Commercial Property Podcast. Now, I'm sure it's still ingrained in your brain, the heat wave that we have had in June 2026. Obviously, if you're listening to this several years down the line, you might have forgotten. But as of the date of this recording, we are deep in the heat wave. And so I thought I'd make that relevant to commercial property because it's amazing how we can take lessons from things that are happening. So I know today's topic sounds maybe slightly unusual because what's the weather got to do with commercial property investing? Well, the interesting thing about it is that it's all about our tenants because when we are investing in commercial property, we are investing with businesses. And, it really is a partnership. I think we like to think of ourselves as landlord versus tenants, but actually, we want our tenants to succeed. And therefore, we're really interested in their businesses. And, weather is one of them. So if you think about seasonal businesses where they maybe it's because of location. They're in a seaside town. So, a client of mine was looking at a property in a seaside town in Cornwall recently. And, we were really thinking about whether it was going to be affected by the seasonality of the trade there. So he went away and we looked into it, and we realized that actually in this particular location there's a university, there's cruise ships that come in, and actually on the face of it, obviously there's more due diligence to do. Perhaps it's not quite as seasonal as we thought, but there's other locations where they're going to be rammed, the beaches are going to be full. But what's going to happen in the winter when it's driving rain? I don't know. I know that all of us probably are yearning for driving rain during this particular heat wave. So what we're particularly thinking about is obviously in that scenario is consumer-led businesses. Now, remember that commercial property, we can divide between consumer-led tenants, tenant businesses that serve consumers, serve people, and business to business. So they actually work with businesses. And this is where there is a quite a big difference about the seasonality of the trade. But even then, we can actually learn lessons with B2B. So, for example, we are definitely, I mean, I'm a convert in terms of, I'm a geographer by training. So I learned about global warming 30 years ago when I was at university, probably a bit longer, unfortunately. And we can see it coming into force now. I think that's only my personal view. So, assuming the world is going to get hotter, which it already is, then, where are the trends? Because what we're really interested in commercial property is we're interested in trends. So, for example, with businesses, is there going to be more demand for air conditioning? Is there going to be demand for eco-friendly air conditioning? Because obviously with one hand you give with that and one hand you take away because of the carbon output. And so, what about the type of construction of buildings? What about where the trends are leading in terms of, where populations are? Like, there's a lot of things that we can learn from the weather, but also other things. But also in bad weather. I'm calling the heat wave bad weather. So for those of you that like it, huge apologies. But when it's really, really hot, or also when the weather's like snowy or rainy, construction slows. That's going to affect builders merchants. It's going to affect logistics, agricultural suppliers, food distributors, harvest, seasonality. So in hospitality, massive effect, in with the weather. With sunshine comes pub gardens, outdoor dining, wanting decks outside, properties, great views, festivals, hotels, holiday parks, camping, golf clubs, marinas, tourist attractions. And you've got kind of the other side end of the thing, like Christmas retailers. garden landscaping, etc. But you need to understand the seasonality of some of that trade. And so, also with climate change, we might be looking at hotter summers, more flooding in the winter, storm damage, water shortages, insurance costs increasing, heat affecting buildings, the air conditioning we've already talked about. So that's going to affect your future proofing of assets, flood risk, cooling costs, perhaps, M&E costs. Also your kind of EPC potentially, if you're putting air conditioning and heating and cooling in a building, energy efficiency, bringing solar into buildings, bringing shade into buildings, EV charging. And, in retail, consumer mood changes, people browse, people stay longer. We call it dwell time in retail, people stay longer. In poor weather, when I'm talking about poor weather in this context, I'm talking about rain or cold or snow, whatever. People stay away. Online shopping increases, footfall falls. When you're in the office sector, you might get more hybrid working when people are when it's cold or when it's hot or when it's flooded. But again, you want building cooling, air conditioning. So when you're looking at commercial property, we are not just looking at buildings. Far from it. It is about the businesses that occupy the building. And what we're really super interested in is the longevity of these businesses, how resilient they'll be in the face of change, because change is inevitable. So we may as well look at the trends and we may as well analyze that. And one thing that I'm really passionate about is kind of clients finding their niche. So when I start with my board members, we start with the end in mind. Where do they want to get to? What's important to them? Why are they investing? But then we will form a niche that kind of that caters for that, because there's no point investing just for the sake of it. You want to invest for a purpose. So that might be cash flow to have more freedom. Therefore, what we want is hands off income. We want long leases. We want full repairing and insuring. We want resilient businesses across all sectors. We don't want kind of dying businesses, or, when the current tenant moves out, that there's a void that you just can't fill the unit, or rents increase massively. So tenant choice, choice of building really, really matters, because we want to, especially where you're buying a property where there is a tenant in situ, we want to understand the tenant. We want to understand how resilient they are, both now and in the future. So what we do is we check the tenant covenant. We look at, how they're trading now. We look at the type of business they're in and whether that ticks the trends going forwards. We look at the building. If that building is ever going to be vacant, then who else would take it? Would they pay the same rent? What else could we do to the building to create value? Could we subdivide it so it becomes more attractive to a wider range of tenants? There's so many things we're looking at. We're looking at tenants. Is the weather going to affect them? Is it our interest rates going to affect them? Tourism, government policy, consumer confidence, fuel prices, technology. Because if the building is fragile, your income is fragile. And so, weather can provide some huge opportunities. So great opportunity is retail or leisure, outdoor seating, canopies, great views, EV charging, covered loading, cycle parking, green roofs. They all increase the attractiveness and sometimes the rental value of a building. So we want to look where the opportunities are, and we want to try and invest in those types of property where it ticks the boxes, it ticks the trends. Whether the heat wave is just a metaphor really for this podcast. It's more about understanding that commercial property is occupied by businesses. It's not static. Businesses exist inside economies. And inside the world economy now, we're much more connected, and we need to understand what affects our tenant, and also what affects the demand for that particular unit if the tenant was ever to leave. And ultimately, we will make better investment decisions as a result of this. So questions you want to ask is this building seasonal? Is this town seasonal, or this city? What happens in a recession? If consumer confidence drops, then is it discretionary spend, for example, where they don't have to spend the money? So that if it's a choice between their food shop and the consumer's food shop and buying an outfit, they'll probably go for the food shop. So discretionary spend. What happens during prolonged rain, heat waves? Is it consumer led or business to business? I would say as a whole, and I don't necessarily mean that everyone should go out buying business to business um, tenant led properties, but it's worth thinking about in terms of B2B, in terms of they're not as at the whim of consumer trends. Obviously, kind of vertically and horizontally, they sometimes can be, but it's important to join those dots. So we're thinking more as business owners here. We're not thinking as, oh, I just want to buy an investment. We're thinking as business owners. We're trying to work through the economics of particular businesses and certain types of locations. We're trying to predict the trends as well. Is a turnover weather dependent? How resilient is the cash flow? Will another tenant want this building? And just things like understanding our tenants is really important. So did you know, for example, that retailers do the bulk of their trade, well over 75% of their trade during the prolonged period before and during the Christmas period? And, if they have a bad year because of consumer confidence or whatever, then, probably their sales are going to be bad for the rest of the year because they won't be able to claw it back. Now, obviously, that's a sweeping statement because there's different types of operators. But again, understanding your particular tenant and particular business is so important in this context. So there are kind of these, probably for the want of the better word, invisible forces that affect commercial property. So I'm talking about things like consumer confidence. I've already touched on that. Interest rates. I don't think that's a hidden force. Interest rates, national insurance on wages, rising business rates. It all makes affordability, rising minimum wages. It all make affordability for employees, for operators, more expensive. And obviously that's really important and very, very relevant for businesses. Have they got the resilience to withstand that? Inflation, whether you're a builder, because you've got cost inflation from that, etc., or any other business. Fuel prices, logistics, that's going to really affect logistics. Grid capacity, EV charging, solar, that's really, really important. Demographics, it's really important, whatever type of business you're looking at, you want to understand the demographics of the location, the socioeconomics of that location. Super, super important. Tourism, local events, national events like football, heat waves, air conditioning units. I don't know about you, but you can't get an air conditioning unit for love nor money now. And obviously, that it drives sales massively in certain businesses. School holidays, how do they affect businesses? I'm not just talking retail, I'm talking offices, I'm talking industrial, sporting events, infrastructure works, inward investment into locations. All of these things are really important. I don't want to overwhelm you because I'm just trying to be really comprehensive with the list. I guess kind of the general flavor that I want you to take away from this, if you don't mind, is that it's about really going a deep dive into the location you're investing in, the sector that you're investing in, the tenant that's in the property or the likely tenant that's in the property, and then the resilience of that property and that tenant to withstand some of the trends that you're seeing coming forwards. I would go as far as saying that the very best commercial property investors don't just analyze buildings, they analyze everything that influences the businesses who occupy those buildings. And if you start looking at that from a more business mindset than just a property-led mindset, you're ultimately going to be a better investor. So when I start working with my board clients on their niches, this is everything we look at. AI can obviously help with you to some degree, but please do check AI because I've seen lots of glaring mistakes in it. But you want to be really doing a deep dive. If you've chosen a niche in a certain location, then why is that? Is it because you're predicting that defense spending is going to be concentrated in that area? Is it because there's going to be huge infrastructure improvements? Maybe HS2 is going to run through there in the future. We saw it with the Elizabeth line as well. Is it because actually because of the socioeconomics, you get really high end operators that operate the retail and they want to take long leases because they don't want to give up their pitch? Is it because it's near a motorway network? For industrial, that's really, really important. So it's about, before you kind of put all your eggs in a basket and before you make an investment, is really understanding this wider business, these wider business influences, and watching budgets, understanding impacts on tenants, and trying to predict the direction of travel. Now, sometimes that's difficult, but we can only give our best guess. And obviously, having had 30 years in the business, I've got lots of experience of how this has happened. I've seen businesses rise and fall over the years, and that's what I help my clients with very intimately, to form their niches. I'll hold their hands, forming their niches. So if you're interested in finding out more about how I help clients, please do click the link in my show notes. But I hope otherwise this has been really useful for you to just to start kind of widening your view on commercial property. You can let a house to anybody, but you can't let a commercial property to everybody. So your choice of location, sector, type of property is super, super important. So I will see you next time on the Commercial Property Podcast.